Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on oil and going to start off with the weekly chart here on oil because this is what changed everything in my opinion. We had a clear higher low pattern with an uptrend support line that had been tested 3 times and held. We had a clear downtrend resistance that had rejected the price 3 times, and we were watching for this range to continue to tighten. We made a bear break 3 weeks ago, very clear bear break, and that was the signal that momentum had shifted to favor the bears. So we have had a significant pullback over the last 5 weeks. But what is most notable about this to me that let me know that the bears were in control is not only did we break that support, but we had a perfect back test and rejection of that previous support, now resistance, and then saw continuation to the downside. So looking at that on the daily time frame and how that played out, so getting rid of some of these lines here to make it less confusing, but this uptrend line right here was what we were looking at on the weekly time frame. So we lost it on the daily. We had a bounce attempt and then 3 days in a row rejected from that back test, and then we saw lower highs and lower lows continue. And we're seeing bear flags. These are all bear flags. So we have a dump, a bear flag bounce of 2 days, another confirmation, bear flag confirmation, bear flag confirmation, bear flag confirmation. Potentially, we're forming another bear flag. So the RSI at this point is oversold, and when the RSI is oversold, the odds of a bear flag seeing continuation to the downside become less likely because more people are likely to buy these oversold bounces. But it's going to be a very clear break either Sunday night or Monday morning where we have our inside bars, multiple daily inside bars in a row. So the range that I'm watching, a break of 42.51, and we look to 42.03 and potential continuation to the downside. And if we see a bull break of 43.18, we're looking up at 43.29 and 44.17 for an oversold bounce. So I do anticipate that if we do see a bull break of this inside bar, it's going to be a short-term bounce. And I think the bulls would be lucky to make it back up to $46, $47 on this oversold bounce. But just looking at the weekly time frame, we have to see a bullish reversal candlestick as step number 1. And this is not a significant enough lower wick to be a bullish reversal candlestick. There are still some support levels to be watching from this bull move back in 2016. I'm looking at 42.23. And we did break that level actually with the low of this week. So next support and the absolute must-hold level for these bulls is 39.23. If we lose 39.23, we do not have much support until we head back down to the 2016 lows. So 39.23 is an absolute must-hold level for these bulls, and I do anticipate the bounce will begin to play out before we reach that level. Again, after 5 red weeks in a row. This is the most prolonged bearish weekly stretch that we've seen here, and just scrolling back, we have not seen 5 red weeks in a row since the dump back in 2015. So I am anticipating the bulls to turn things around in the short term, which gives nice short-term day trading opportunity, either day trade or a couple days swing for these bullish plays. But again, I need the bull break of these inside bars on the daily time frame before I am confident that the bulls have enough momentum for this oversold bounce to begin. So looking at it a little bit more zoomed in, more detail, the hourly time frame, we can see we have a little bit of a higher low pattern. We can draw an uptrend support line to be keeping an eye on, and I would be putting that support right there, making sure no hourly candlesticks close below. And in terms of resistance, I would put a line at the highest price that we've seen on this bounce so far. So that is an ascending triangle pattern, although it's not a very good one, because we only touched this resistance once. So if I wanted to get multiple touches there, I would drop this line down, and let's see if we use the closes of candlesticks. Well, that would put us breaking above it. So really, the resistance line depends where you put it. I'm not going to try and make it an ascending triangle. If I were, that's where I would put it right there. But I'm interested in the highest price that we've seen on this bounce so far, and that is up there at 43.29. So the bulls want to continue riding this uptrend support, break 43.29, and get this oversold bounce going with some momentum in their favor. So USO on the daily time frame, same thing with it's not an inside bar exactly, a little bit of a difference there, but we are looking for the bulls to see a short-term oversold bounce as the RSI is down under 30 on the daily. Last time we got an under 30 RSI on the daily, the bounce played out for a couple weeks, and there was nice gains to be had. So we are looking for a similar scenario Once we closed over the exponential moving average resistances, that was confidence building on the daily time frame here. So we are watching those exponential resistances, which have been rejecting the price. Every little bear flag that I just showed on oil has been rejecting from these exponential resistances on USO. So we have to get over those levels for it to not be a bear flag. And early next week is going to be very telling. The weekly time frame, same story, breaking all kinds of support. So USO is a little bit different than US oil in regards to support that we have left on the weekly time frame. So looking back to it, we have already broken very key support levels. So the lowest price we've seen on this dump is 865. I'm looking down at 814 and then the low of 767. So you can see where USO stands. We're hitting the price back from February 22nd. And if US oil were doing the same thing, back on February 22nd, we were back here. We were down here in the low 30s. So a very significant difference where US oil stands compared to USO, with USO clearly being more bearish on the daily time frame, losing all these supports. And it looks like the bears are about to take back over and continue this trend. So we look at the zoomed out weekly chart over the past 5 years, very clearly lower highs and lower lows. We had a bounce for a year, but we are losing all those support levels on the bounce, and we're heading back down towards our low. And obviously, if we break that low, it's going to be significantly bearish. But watching USO with a lot more weakness than US oil would definitely factor in to my trading game plan. And I would likely hold these bounces shorter term as the longer term trend favors the bears on USO. So that's what we've got heading into next week. Need a bull break of these inside bars on oil to see some short-term upside. Need a bullish reversal candlestick on the weekly time frame to form this week. I appreciate you all watching, and we will continue to check back in.